Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. Sun Pharma denies allegations of insider trading and poor corporate governance in an investor call last evening, said it did not receive any communication from SEBI regarding the whistleblower complaint. Hindustan Unilever will continue to pay royalty to Unilever for the Horlicks brand, but experts give their thumbs up to the overall deal. The National Company Law Tribunal has restrained 9 former IL&FS from selling or pledging any of their immovable or movable assets, at least till the next hearing. And ANI reports that the level 3 fire that broke out last evening in Goregaon has now been doused. And boy, that was frankly the talk of town, at least in Mumbai, if not the rest of the country. But yeah, thankfully the fire has been doused. Anyways, let's talk about trade and how is it looking like. A quick check at the world markets and what they did. Remember, when we shut shop yesterday, Europe and the US markets were looking very, very robust. There was a 2% gain to the European markets as we shut shop, and the Dow futures were looking like they'll start off a couple of percentage points higher. They did do that, ended just mildly lower, so that trade war diffusion cheer has been largely short-lived, to be honest, because Asia is starting off with a fair tick of red on the screen. Almost all the Asian bourses have a tick of red. The SGX Nifty, which was very calm and quiet in trade yesterday, in stark contrast to the other markets, also points towards a muted start in trade. So not the best of starts that we'll have. A couple of things that have happened. One, on the US side, while the expectations of a Fed tightening cycle being as swift and as large have come off, the yield curves have inverted. So now the 3-year yield curve, and this is the spread between the 5-year and the 3-year yield curve. As you can see, the spread is narrowed and moved back into the negative, which means that the 3-year yield curve is now higher than the 5-year yield curve. Just to simply explain what this means, typically in a cycle, the far strike yield would be higher than the near strike yield because the markets would believe that the rates would keep on rising. This time around, the 3-year yield is slightly higher than the 5-year yield. So the spread is completely diffused, and I would presume that would mean that the markets are now believing that the pace at which the Fed would hike rates will not be as swift as earlier envisaged. That is one factor that's played out yesterday. What the other point, of course, has been the bugbear for Indian markets and crude prices. They have bounced back and they are stable in today's session as well. But essentially a bit of a bounce that has come into crude prices, and that may continue to put a lid on any kind of optimism that we may have for our markets. So a bit of a bounce for crude prices as well last night, and they're staying stable in today's trade. And frankly, if you look at the trade setup, while the Nifty's been making higher highs and higher lows from last 5 trading sessions on a daily scale, which would mean that there is optimism, the fact remains that the rally is now lasted for quite a bit. At 10,883, we are significantly above the levels that we hit a month ago, about 10,000 or slightly higher than that. So there's a bit of a rally in the offing that we've had already. The only deviation for the last 2 or 3 sessions is that the mid caps and the small caps are finally participating, the last 2 days in particular. And if you look at the last 5-day chart for the Nifty versus what the mid caps and the small caps have done, you will see that there was a wide gap between what the Nifty did, which is the white line, and the mid caps and the small caps did. But the last 2 sessions, which is the far left of the screen, we've seen a bounce back in the mid caps and the small caps, and certainly hopes that that continues. But I personally think that it's difficult to see possibilities of a runaway move in our markets ahead of 2 key events for our markets in the next 7 days. One is the RBI policy that comes out on the 5th. So that is one big event to watch out for. And then the exit poll numbers come out this Friday. I think the markets will react quite strongly on Monday if indeed the exit poll results show something that the market doesn't expect right now. So ahead of that tentativeness, you'll probably see action on the options side, but really doubt that there'll be a meaningful move on the indices ahead of these 2 key events. So maybe quiet as she goes would be the order of the day. However, in light of all of this, there'll still be stocks that could react, and let's talk about 3 or 4 of those which are in news or which could react. So Sun Pharma, of course, remains a stock in focus, and we'll talk about it in great dwell too much on it, but for the fact that one key highlight was that Sun Pharma obviously came out and said that there is no wrongdoing, and they've given clarity on the recent queries that have been raised. So if you are interested in knowing more about it, do stay tuned on. We'll get that to first up on First Word. HUL, the brokerages expect deal to be value accretive, and CLSA in fact has gone ahead and upped the target price to 2010 rupees from 1750 rupees. That shows the extent of optimism that exists within the Indian brokerages on HUL, this despite the stock being a largely expensive stock. Edelweiss and the Economic Times is reporting that top private equity firms are in race to buy stake in the wealth and asset management business. That stock was very active yesterday compared to a lot of others. So a lot of others haven't quite bounced back, the Motilal Oswals and the IIFLs, but Edelweiss has bounced back. This could be one reason as well. Adani Transmission and the Financial Express is reporting that the UB cabinet has chosen the company for setting up transmission project in the state. We'll know all about investments of 871 crores, but Adani Transmission and Power Grid are amongst the two companies that have been chosen for Obra C and Obra B. Let's see if this stock brings a positive reaction on the stock. And lastly, UFlex. This one typically flatters to deceive, so I'm not quite sure what the reaction could be, but the news optically seems positive. Their global film manufacturing arm has gotten a US patent. They've gotten exclusive rights for manufacturing a special film in the US, Europe, and India. So optically, as I said, seems very positive, but you never know with UFlex what happens. It's been a dog of a stock, so to say. Let's wait and watch if today's session brings about some reactions on UFlex, an important one to monitor today. However, let's tell you what's lined up on First Word today. It's the collection of the top editorial stories that we believe we should bring to you. Sun Pharma's Managing Director Dilip Shanghvi tried hard to allay investor concerns surrounding the company yesterday, but did it pull all the queries to rest? Maybe not. Darshan tells us why. There is more clarity on HUL-GSK Consumer merger now that both the companies have spoken to the media and analysts. Agam takes us through the pros and cons of the deal from an HUL shareholder's perspective. Avanti Feeds investors have lost their taste for the company, and shrimp prices in the US have a lot to do with it. So Amit comes in to tell us why the talk of town the last year is now certainly in the back burner. And 9 former IL&FS executives now have restraining orders on their name. Ridina takes us through those details. But start off arguably with the most important company, and that's Sun Pharmaceuticals. The promoter Dilip Shanghvi denied allegations of insider trading and poor corporate governance as India's largest drug maker. Remember, the stock tumbled intraday about 13% after a report that SEBI may reopen its probe against the company and some of its promoters for various lapses. Shanghvi addressed investors and tried to allay some of the concerns at the conference call last evening. Darshan Mehta joins us with what transpired. Darshan, good morning.
Yeah, so it was basically a conference call that lasted over 1 hour. Dilip Shanghvi highlighted that he's going to speak on the sales note, which obviously it was the Macquarie sales note, and the Press Trust of India report that came out in this whistleblower case. A lot of allegations were put. 3 of them probably were a little serious. Others he managed to give out clarity. He gave out clarity on all of them. But I'll take you through all of them. What he saw. The first allegation was Walia and Timbadia involved in some bit of stock rigging, and they are auditing some of the subsidiaries. Now, Dilip Shanghvi says that the matter is almost 20 years old. Most of them have been given a clean sheet, and they're saying they have almost 66. They have 66 subsidiaries, out of which 16 are being managed by them. They're saying it does not make sense to play a lot of global firms because the cost will go up, and all these 16 subsidiaries are just 0.6% of the consolidated revenue. So he says it's not a big deal, but he says that if there are investor concerns, they are looking at changing this. So that's something that he said. The second was the allegation on Lakshdeep Investment and Finance not clarified as the Sun Pharma promoter. This is owned by Sudhir Walia in its personal capacity. Both Sudhir Walia and his wife together own 2% stake in Sun Pharma. The Macquarie note says that why are they not promoters? Dilip Shanghvi says that even if at the time this was done, the legal opinion was that they did not need to do it, and that's why they didn't do it. He is saying that they're seeking legal issue at this point of time. If the change needs to be done, they will do it. But they said that this will not bring any substantial change to the promoter shareholding. It's just 2% that is there. The third one was the allegation of Jerim Capital being as part of the fundraising plan between 2004 and 7, and they had links to Ketan Parekh and Dharmesh Joshi. Now, what he said at that point of time, that JP Morgan was the lead banker for the fundraising. What Jerem Capital was the co-manager. He did not give any details in terms of links to Ketan Parekh and Dharmesh Doshi, but he said that at that point of time, Sun Pharma was not as big as what it is. They're saying that potential the revenues that they were almost it was a very small company at that point of time, and that is they did what was best at this point of time. The fourth allegation was lending money to some 4 individuals without security. He said this was some 20-year-old matter. All the money has been required, and it was only a few lakh rupees, so that was taken care of. Insider trading with respect to Ranbaxy, he's saying there was no insider trading. It was just a timing issue where the issue was given on a Sunday. Their banker said that don't put out a trading window holiday, which they didn't, and they said that just to settle it, they paid 18 lakhs. Otherwise, the legal cost would have gone into crores of rupees. Sun Pharma's domestic business is rooted via Aditya Medicines. This was a big issue that was there, and a lot of analysts say Aditya Medicines was a related party only in FY18. They said before that there was not a related party because of the change in shareholding structure. Aditya Medicare became a sales.
No, sorry, just go slow through this. What is the allegation?
Yeah.
What is
so
it?
The allegation is, why is Sun Pharma's domestic business being rooted via Aditya Medisales? And a lot of brokerages put their questions on this. What Dilip Shanghvi says that it became a related party in FY18 because before that the shareholding norms was not consolidated. Once it became consolidated, it became. He said that the entire deal was done because they gave a lot of tax benefits to the company. But he said that if there are concerns, he's open to two options he gave. Either Sun Pharma takes the distribution arm of the company, or else Sun Pharma buys this at cost. That is what he says. He's saying if investors have a problem, he will do it. But he says that this was mainly on account of benefits that the company was getting. He said that Aditya Medicare is not earning extraordinary profit. It's just some 0.4% net profit margin as a distribution company does. So he's open to this. Low taxes allegation, Sun Pharma has always time and again clarified that they have factories in tax-free zones, and as soon from a 3% tax now they moved to 15% because some of their factories are coming out of tax zone, and said this will increase given that most of them will come out. The other allegation was a guarantee given to Suraksha Realty. This was put in the Macquarie note. He says that there's no guarantee given, no loan given to Suraksha Realty, which was a non-party. Whistleblower case against the company by SEBI. This is the second overhang that the analysts feel. Sun Pharma says that we have no clue. What we have read is what you read in the press, in Press Trust of India and the Money Life article. He says we have not received any query from SEBI. We have not received any query regarding reopening of the case. So he's saying till the time we don't have this 150-page document, we can't comment. Analysts say that this could remain a overhang because that is a black box. We don't know what is coming there. And finally, the last one was loans given to non-related party, which have increased over the past few years. 2,200 crores of loans were given as per the annual report of Sun Pharma to non-related party. And this has increased substantially over the year. This was another big point wherein clarity was not given. Dilip Shanghvi said that this was a loan given to non-related party engaged in the pharmaceutical business, but because of it being a structured product and because of confidentiality agreement, he can't name that person. So that is something that is of an issue. He's saying that loans were given at arm's length at market rate for a period of 2 to 2.5 years. So he can't. So he says that this loan is still on, but if need be and if there are analyst investor concerns, he will look at ways to reverse this loan back into the company. So on all parameters, the others were negligible stuff what the Macquarie note had said, but I think these three concerns in which in all three, except for the whistleblower, he can't do anything. The other two, he's saying that he's open to rectify it and reverse the issue that has happened. So that's the sense that Dilip Shanghvi gave. So most of the queries were answered.
He's remained silent on a couple of those, Darshan, maybe German Capital and a couple of others. But my question is, how have brokerages reacted to this? Have they been sanguine about the responses that have come in?
Yeah, so these are the 3 points that they have raised. First of all, the whistleblower everyone saying that till the time there is no clarity, we don't know what will happen to the stock. If there's an adverse penalty or something, they don't know. So that's a black box which no one knows. On Aditya Medisales, they are saying that we are happy that the management is open to do the restructuring of this company, whatever it is. So that's the other. And the third concern was this issue of non-loan. So there is a big concern. They are not saying that where it's given, why it's given. So that remains a question mark. Except for Edelweiss, which has cut the target price on because of a lower target multiple because of uncertainties. All the others have maintained their target price. Some of them are already underweight on Sun Pharma. So that's okay. They're saying that we need clarity on this, but apart from it, the other issues were immaterial, were pretty known, and the management has answered them.
Okay, I just have one quick follow-up, Darshan. Aside of the notes, when you speak to analysts and the sales guys, Are people saying that they will stay on the sidelines with regards to Sun Pharma currently? There are better stocks in the pharma space to buy. Are people going to tell their clients to go out and buy Sun Pharma post this clarity?
See, I don't know about that, but the few people that I spoke to, and I cannot mention them because they are from the buy side, sell side combined, they are saying they need more clarity on this factor. Some of them have said that there is a potential of Sun Pharma rebounding because it's a great initiative that Dilip Shanghvi himself came and answered all the queries and took all the questions head on and answered them. He said there were some things he couldn't answer because it was confidential, but they were happy in which the way the conference call went.
Okay, Darshan, thanks for putting that into perspective. Appreciate that. A long conference call and a detailed piece here on Sun Pharma. So for everybody who wants to understand, I hope you watch this. Well, the next piece is, of course, the other big mover in trade yesterday, and that's HUL. Now, Unilever will buy GSK Healthcare business in India and merge it with HUL in a deal worth $3.8 billion. We know about that. Agamakali standing by with the contours. And more importantly, who gets what out of the deal and what have brokerages said about this deal now?
Right. So, Neeraj, I'm going to start off by the split of the deal because there's still a little bit of lack of clarity with respect to how this deal has been perceived by the markets in general. So, firstly, it's important to understand the Boost, Viva and Maltova, brands that we've all grown up to, they will belong to the merged entity of Hindustan Unilever and GSK. However, Horlicks will not be owned by Hindustan Unilever. It will be owned by the parent company, and that is perhaps the most important clarification I have to make out here because based on this, you will have royalty payments that Hindustan Unilever will pay to Unilever. Now, that's another clarification that needs to be sort out. But that said, I'm going to come back down to the pros of the deal. And in terms of the positives, of course, Horlicks along with its Boost brands are the number one HFD brands in the country. By HFD, I mean health food drinks, which means that both these brands will bring scale to Hindustan Unilever going forward. Not only that, it is also going to add in terms of volumes. Now, in terms of penetration, currently for HFD, the penetration stands at an overall 24% in the country, and in rural markets it's 14%. What this means is that not only do they dominate this market, but there is also a lot of scope to grow in the markets considering such low penetration levels, and that is where Hindustan Unilever can take advantage. Going forward, as a combined entity, the food and refreshment segment of Hindustan Unilever after the merger will come to around 10,000 crores in terms of revenue. I think everyone wants to know whether or not it is going to be EPS accretive. It is going to be EPS accretive on the very first day. And even after the merger, eventually they could see an expansion of around 800 basis points to 1,000 basis points in terms of synergies. And those are some of those pros in the deals that people are talking about.
What about the challenges?
Again, it is not a... So we do know about the gradual decline of malt-based drinks, especially when it comes to something like GSK Consumer. So it is a very specialized category. Hindustan Unilever doesn't have too much expertise in this particular area. Moreover, if you consider the CAGR of GSK over the last 5 years as against Hindustan Unilever, it is less. Volume CAGR is even lesser at 3% as against Hindustan Unilever's 5%. So that's also the reason why it's a little cheaper as compared to Hindustan Unilever. And of course, margins currently at around 24% for GSK are at peak because of tailwinds that the raw materials saw. That will not always remain so. And that said, there is also this overhang of GSK selling out eventually after 2009, after the completion of the merger. And of course, integration issues are the other thing. But that said, these are just some of the challenges that Hindustan Unilever has to deal with, and well, we'll see how it pans out for both these companies going forward. But I just want to mention that when it comes to analysts out there, everyone has given it a thumbs up, but no one wants to change their rating. They're all hold because of the ridiculous valuations at which Hindustan Unilever currently trades.
Say for HUL, say for CLSA, right? I mean, I just thought that, the fact that it remains an EPS accretive deal should matter to brokerages.
Right.
And CLSA, of course, while they've maintained the rating, they have a revised target price, I think, of 2010
over
versus
2000, yeah. So that's about 200 points away from here. So I read other reports from something like a Jefferies or UBS. They maintain the price of 1,800 rupees per share. And again, it's a valuation game at the end of the day. So yeah,
that's true.
Yeah.
And yeah, at 55, 60, 65 times, depending on how you look at the valuations, it is very, very steep.
Yeah.
In Agam's words yesterday, it reclaims the spot of being the most expensive FMCG name.
Yeah.
Agam, thanks for putting that into perspective. Really appreciate. So those are the deal contours and some reactions from the brokerage community. But as Agam said, save for CLSA, which is up the target prices, some of the others have kind of maintained because of the expensive valuations. Debatable. HUL has always stayed expensive. Question mark about whether this can spur the stock further. Let's wait and watch. Well, if HUL is doing really well, shrimp companies are not. In the international shrimp market, in fact, the prices of shrimp in the US, one of the world's largest consumers, have slumped to 3-year lows. And India's top shrimp feed manufacturer, Avanti Feeds, has faced its worst drought since listing. Amit Johnson, the details for the space at large and not just for one company out here. Amit, what's happening here?
Well, in the feed space, it's actually the one company that is the largest producer, that is Avanti Feeds. So if you see, in 2018, so far, Avanti Feeds has lost as much as 3/5 of its market value, marking its most worst year-to-date decline since listing. Now, there's no doubt that in the previous years, the stock had run up a lot, but in 2018, so far, it has lost nearly 59%. Now, two reasons that led to this kind of fall for Avanti Feeds. First is the fall in the shrimp prices, which led to drop in shrimp farming in India. And second is the rising raw material prices used to manufacture shrimp feed in India. Now, if you see Avanti Feeds, now it has two business segments. First is the manufacturing shrimp feed, and second is exporting processed shrimp. So you can see clearly how a drop in shrimp prices will impact Avanti Feeds, both these business segments. Now, shrimp prices started to rise in India as a disease outbreak in China, Thailand, and Vietnam impacted their production. Now, these were the large shrimp producers in the world, and a decline in their production led to a rise in shrimp prices. Now, this led to increase in Indian shrimp production, because of which the feed demand increased, thereby benefiting Avanti Feeds. But as production started to recover in these countries, shrimp prices began to fall both in international and in the domestic market, which made shrimp farming unviable for the farmers. And as it became unviable, the feed demand came off for these companies. Now, if you see in second quarter of financial year 2019, shrimp prices were its lowest in at least the last 3 years. It was around $8.3 per kg, that is a drop of nearly 20% from the start of year. Now, as the business was becoming unviable for the shrimp farmers, shrimp farming in India reduced by at least 20 to 25%, thereby impacting the feed volumes of Avanti Feeds. But the bad news doesn't end here for Avanti Feeds. At the same time, the prices of its two key raw material, that is fish meal and soy meal. Now, both the prices of these two key raw materials started to increase. Now, because of this reduction in shrimp farming, Avanti Feeds was not able to pass on the impact of rising raw material prices to its farmers, thereby taking a direct hit on their EBITDA margins. In fact, if you see in the first half of financial year 2019, you can see the kind of impact that Avanti Feeds had. In fact, if you see the feed sales volume, that was lower by nearly 6.5% compared to last year because of lower shrimp farming, and revenues were low by nearly 4.5%. And because of this double whammy of falling prices and rising raw material prices, feed segment EBITDA declined by nearly 53%, while the margins, now that declined by nearly 1,300 basis points for Avanti Feeds compared to last year. However, currently, if you see, the conditions have started to improve for the company. Shrimp prices have seen a bit of up move in the recent past, along with the demand pickup, and along with this, the raw material prices that for fish meal and soy meal that have also started to moderate, thereby benefiting the margins of the company. However, despite these benefits, analysts still believe that growth will only be visible for Avanti Feeds starting from the fourth quarter of financial year 2019. So still one more quarter of pain we can expect from Avanti Feeds.
Okay, so Amit, thanks for putting that into perspective. That's Avanti Feeds and the shrimp space by and large, which is undergoing some issues. The last piece on First Word today, the Mumbai NCLT has barred 9 former IL&FS executives from selling their movable and immovable assets. The tribunal, which was hearing a plea filed by the government, has asked all respondents to file reply in 3 weeks. Ridhima Saxena was in the courtroom when the interim order was read out. Here's her report.
The Serious Fraud Investigation Office report that was submitted to the NCLT found that the 9 officials that are now being restrained from selling or pledging any of their personal assets were also the key decision makers for the holding company and its subsidiaries. This, according to the report, led to undermining of the interest of the subsidiary companies and associate ventures, which acted only as departments of the holding firm rather than functioning as independent separate entities. The report also alleged that the top officials at the group showed profitable and decorated financials which hid the depleted financial condition of the holding company, as well as this was done to avoid breach of a regulatory ceiling to create leverage on the company's books and also to obtain high credit ratings. The report also found that 46 overseas subsidiaries of the companies could not be located or had ceased to be subsidiaries of IL&FS, for which the court has asked Ministry of Corporate Affairs to submit a detailed affidavit on how these companies had vanished within 15 days from December 3rd.
Well, that brings us to the end of First Word, but a lot more lined up on Indian Open. We assess the impact of the lackluster festive season on Dabur's plans for the rest of the year with CFO Lalit Malik, and talk about the tailwinds for the paper industry with AS Mehta of JK Paper. But after this break, a full tilt towards the day's trade.
It's not about the award. It never is. It's about what went before and what came after.
It's about getting recognized for the trust and confidence the customer has shown on us. We actually strive for it.
It's about the brightest ideas and cleverest implementations. It's about innovation.
It's about impact for manufacturers and help for shoppers. Tangible, meaningful impact for manufacturers who innovate, and genuine help for shoppers looking for the best new things on the shelves.
It's not about the award. It is about standing out. It's about being a giant even if you're really, really small. It's about picking the leaders of tomorrow, today. It's not about the award. It's about competing.
It's about an unbiased, countrywide, face-to-face consumer survey that is unique and provides relevance and differentiation. Essentially, we're adding something to the marketing arsenal of product teams.
It's about doing one's best and raising the bar each time.
So it's about the end customer. If you have that clarity, what is this need that you're trying to solve for the end customer?
About exceeding expectations. About going all in. Coming. Product of the year.
It's about feeling good that we are associated with Product of the Year. This is our 10th year.
30 years of finding brands that capture $1 billion.
Hello and good morning. You're watching Indian Open right here on Bloomberg. Quint hop across to Asia to see how we are faring this morning. Seems to be more mixed bag with a slight bend towards the negative side. Nikkei 225 down closer to about 0.7%. Shanghai just about bobbing its head in the green, while the Hang Seng loses about 0.2%. So the initial excitement around the truce of the trade war seems to have subsided. For our markets as well, SGX is taking a breather from those continuous days of up moves that we've been seeing, and that translates into our moves as well here. But SGX is down 0.1% right now, 10,927. For yesterday's trade, on the more liquid space, the futures and options side, what happened on the Nifty, what happened in specific stocks. Let's go across to Agam to find out. Agam, good morning.
Good morning, Devi. Now, well, we did see consolidation in the benchmark indices. It was evident in the kind of moves that we saw, or rather the lack of moves that we saw on the Nifty. As you can see, it was largely flat, 2% added in open interest. Nifty banking index futures seeing unwinding of as much as 2% in open interest. But the WIX fell by as much as 5%. This clearly signifies and indicates that we're seeing a contraction in option premiums. The WIX currently at around 18.2. And speaking of options, let's take a look at how things are panning out in terms of open interest distribution. And that continues to stay with the 10,500 on the lower end. However, though max open interest currently is with the 10,000 mark, the 10,000 put. On the higher end, we're looking at 11,000 call with the one with the max open interest. And in terms of changes too, it was unwinding in the 10,700 mark that we saw, the 10,700 call, and more writing around the 10,500 put. But moving on to your Nifty put call ratio, that has largely remained around the same levels, around 1.68. Nifty banking put call ratio at a neutral level of 1. So that means one call for one put in open interest for the Nifty banking index. But let's move on and talk about the stocks. Kaveri Seed Company seeing fresh longs. On the other hand, Arvind seeing fresh shorts, considering a 10%, rather 9% increase in open interest. And we also saw a lot of fresh shorts in something like an LIC Housing Finance, which declined by around 4.3%. It seems like it's going to be another mixed year of trade when it comes to broader markets. So what we picked up is the advanced decline ratio towards the positive, and traders would hope that that trend would remain even as we move into today's day of trade.
All right, Agam, thanks very much for that. That is what's happening in the futures and options space. Remember, we made our touch and go with 10,900 in yesterday's session, though not managing to pretty much stay above those levels. So that's going to be crucial and important to watch out for. A lot of, like Agam highlighted, a lot of the action on the upside now, stands about 10,900 and then carrying forward to 11,000 in terms of call writers coming in there, placing that resistance for the index. But 10,883, the last series was particularly positive, about 7.5% on the Nifty, and the change that we've been seeing in the last two trading sessions has been that the broader markets, Neeraj, have started to contribute. We saw the kick in of the mid caps and the small caps in yesterday's session that clearly outperformed the benchmark indices.
Yeah, and quite a stark deviation from what was happening in the preceding 4 days. As we marked the trade setup as well, if you just look at the chart, the preceding 4 days, the white line, which is the Nifty line, did remarkably well, and the mid caps and the small caps couldn't quite play catch up. The last 2 days, the breadth has been positive, and yeah, but this is the one. We just look at that, the blue line and the yellow line, they've had a bit of a pullback in the last couple of days, and kind of tapering out the difference in performance between the indices over the last 5 days or the last 7 days. So, well, it's good news for the markets. I think also be watching out for what's happening to the auto names today, Devina. Yesterday wasn't a particularly great day for autos. I think from a sentiment perspective, they need to participate. Let's wait and watch if that happens.
Yeah, and we'll get more commentary from our experts as well once they join us on the show. But in the meantime, actually, let's go across to our research team. All of them are here with us. We've got a lot of stocks and news to cover, some brokerage calls coming in early this morning. So Yash as well as Amit, both of them are here. Yash, I'm going to start off with you first on some stocks and news.
Good morning, Devina. I'll start with Uflex Limited, wherein the company's global film manufacturing arm Flexi Films has received a patent in US for the manufacturing of its entire range of BOPT films. Now, with this, the company has received the exclusive rights to manufacture and sell the special BOPT film in United States, Europe, and India. Wellspun Enterprises would be in focus as well after the company has signed an agreement with NHAI for the construction of a 4-laning highway project in Tamil Nadu for a total cost of about 2,000 crore rupees on the hybrid annuity model. NCC has come out with an update with respect to their order book situation for the month of November, wherein they have received 2 orders. One is worth about 174 crore rupees pertaining to its electrical division, and another of about 46 crores for the water business. So in total, some 220 crores is what the company has received. Omax Autos, the board of directors of the company have approved the setting up of a new manufacturing plant to produce auto components in Uttar Pradesh for a total investment of about 165 crore rupees. That apart, Ramki Infra would be in focus after the company has completed the sale of its 100% stake in Nam Expressways to Cube Highways, Singapore. Now, with this, the consolidated debt of the company, which stands at about 2,970 crores, would reduce by about 1,500 odd crore rupees, so almost halves his debt. And VST Tillers would be in focus after they reported their November tractor sales, which have fallen by about 6.5% on a year-on-year basis, coming in at about 2,736 units.
All right, so we'll watch out for all of those stocks in trade this morning. So, Amit, what about some brokerage calls?
And the first one is on Gulf Oil Lubricants. Well, MK has initiated a report with a buy rating and a target price of 1150, which suggests a potential upside of more than 50%. Now, if you see in the last 3 years, Gulf Oil's volume growth has been 2 to 3 times of that of the industry, and it will be this strong volume growth trajectory that will lead to market share gains for the company, says the brokerage. Now, going forward, the brokerage is expecting the company's margins to expand on the back of price hikes, premium products, and because of softer crude prices going forward. Along with this, better sector outlook with premiumization opportunities turns the brokerage more bullish on this counter. Lastly, the brokerage is expecting the company's revenue, EBITDA, and net profit to grow at a compounded annual growth rate of 20%, 19%, and 18% over FY18 to FY21. The second we have is on Ultratech, where UBS has maintained its buy rating with a target price of 4,700. Now, the brokerage has cut its FY19 and to FY21 EPS estimates by around 11 to 14% to factor in lower margins due to Banani acquisition. But despite this, the brokerage continues to remain positive on Ultratech as it continues to grow ahead of the industry rate. Now, the brokerage is expecting the pricing benefits to realize within the next few months for Ultratech and the cost synergies to be realized throughout the financial year 2020. Along with this, an improved product mix and easing cost elements could boost Ultratech's margins going forward, says the brokerage.
Okay, thanks a lot for that, Yash, as well as Amit. So those are some key names that could move today. I'll add a couple out there. One of them is Adani Transmission. I already spoke about it in the trade setup. They've bagged this order in Uttar Pradesh for a transmission asset setup. The other one is Edelweiss, and the Economic Times is reporting that large private equity firms are in race to buy a stake in the Edelweiss wealth and asset management business. If this is indeed true, and if this indeed materializes, then it'll be quite something, because the asset management business is still fledgling. It's about 25,000 crores AUM or thereabouts. So that's not very large. But unless I'm very wrong, I think that's the number. But the wealth management business for Edelweiss, I think they were the third largest in the private names after Kotak and IIFL. Edelweiss Wealth is a fairly large business for them to actually go.
Yeah, exactly. The point is, why at this point are they looking at selling
I think post the IL&FS
performing businesses for them? Wealth, obviously, like you said, is a big kicker for them in terms of the kind of money that pulls in. So even in terms of their quarterly numbers, wealth, the segment as such has been a good contributor.
Yeah, I would reckon this has probably got to do more with the liquidity issues the last couple of months. And I think there were enough rumor talks about how some key names, and I wouldn't name an Edelweiss individually out here, but some key NBFCs going out and looking to sell stake in some of their key performing businesses in order to raise some monies. If this is indeed the case, then that's probably could be the reason.
That's contrary to what your conversation with Rajesh was, because he had stated that they're sitting on cash because they don't have the avenues of growth to deploy it right now. So they have the money. Yeah, they have the money to meet the obligatory requirements if at all there are redemptions, but they're sitting on additional cash because they don't know the growth potential is there to deploy that money.
Yeah, maybe just the tight liquidity scenario. I can frankly think of no other reason, but maybe Mayuresh Joshi can. Let's ask him. He's fund manager at Angel Broking, joins us right now on the show. Mayuresh, good having you. Thanks so much for joining in. We're talking about a bunch of stocks in news, and we'll get to the HULs of the world as well. But since we're on the topic of Edelweiss, and the Economic Times is reporting that they might be looking to sell a stake in the wealth and the asset management business. Do you reckon such deals and more of such deals would happen within the NBFC space? Any thoughts on Edelweiss particularly?
Morning, Neeraj. No, no thoughts on Edelweiss because we don't cover that, and there are also compliance requirements. But again, a large portion in terms of the liquidity scenario and the kind of scare that we've probably seen with the yield curve moving up, specifically in terms of raising fresh capital. I think that has caused certain amount of concerns, specifically in terms of how the earnings profile might pan out. and in a certain sense, again, how growth parameters will pan out. So through that bit, I think the larger part of that universe has probably expected to take a hit and has probably taken a hit in terms of their stock movements. But again, I think one really needs to individually test where the stocks, have a look at how their balance sheets will pan out. And a lot of companies have come out in the open saying that asset liability mismatches are probably not there. And they have probably recognized that the spreads and NIMs might actually compress because of yield movement not happening in terms of advances growth at that pace and the rate at which those advances will probably grow and the cost going up. So I think individually one needs to take a call on these stocks, but no individual call on Edelweiss particularly.
What is the overall market view now, Mayuresh? While we've made a good dash back towards 11,000, and the near-term headwinds in the form of the trade war, the crude, the currency, all of that seems to have been put to the back burner.
Oh yes, I think three issues that the market was grappling last week. I think with the large element of trade wars actually getting deferred by 90 odd days, I think the relief was witnessed by global markets yesterday, and specifically the commodity-driven stocks. With the OPEC news and the expectations of what might actually come out in terms of either crude cuts, I think that part has to be seen. But again, I think the crude price moment that we've probably seen again, I think that might just keep that part of the market a little bit more volatile. But I think the more essential part, Divina, is going to be what probably happens in terms of the December 11 poll and the election outcome from these three key states. So I think that's going to be an immediate event risk that the market is facing from a short-term perspective. But as we go beyond that, my own sense is that one really will start looking back in terms of earnings. And again, I think the larger picture would be what happens probably with the general elections. With tomorrow's RBI meet, I think the general consensus is looking at the inflation trajectory. I think the RBI statements more in terms of how they probably expect inflation to pan out, and they've given numbers and statistics in support of that argument. But the second element also will be that rates probably will be kept on hold. So yes, I think it's going to be very, very volatile in terms of what is expected to come out over the next few days. And the markets probably, in my view, would be on tenterhooks, and again in a very tight bound range.
Myrish, two stocks in news, and wondering if you would tell any of your clients to go out and buy Hindustan Unilever afresh after the move yesterday.
I think one really needs to see how the deal has got structured, Neeraj. And looking at the contributions for HUL in particular, home care was almost 34% before this deal. The personal care division contributed 47%, and the F&B was close to 19%. Now, with the addition of Horlicks, which is expected to come through after regulatory approvals over the next few quarters, the F&B part of the business is going to increase substantially. What it also does, it gives it the international exposure, specifically in terms of these malt beverages. And the other element in terms of the value market share that Horlicks probably commands at 49-50 odd percent. So yes, there is a significant addition in terms of HUL's portfolio. The second element obviously is that it's a share swap deal. So again, I think the cash considerations moving in and out of the balance sheets probably do not affect the cash flows for HUL in particular. And the third element obviously is the extensive and the expansive network that HUL probably has. So if one considers GSK's core strengths and the markets that it catered to, it now has a larger reach with 3.8 million outlets that it can probably get through the HUL network. So in my sense, again, I think one really needs to look at the qualitative perspectives on what this deal can bring to the table. And the other angle also is that even though they probably paid a small premium in terms of the market cap, you are probably expected to see significant contribution happening both to the top line, and the gross margins and the EBITDA margins for these products are significantly higher than what the F&B business of HUL is at this point of time. So over a period of time, yes, I think it's going to be value accretive in terms of an earnings perspective. But again, I think it's the valuations that one probably talks about every time you refer an HUL. And yes, it's not cheap. So I think in excess of 50 odd times, one really has no margin for error in terms of earnings reporting volume growth or realization growth. So at this point of time, I think it's a whole recommendation from our side. GSK obviously benefits with the cash flows coming in, but what they probably do with that in terms of the global acquisitions that they're also planning is going to be a strategy that needs to get defined at the end.
Well, we'll talk about not necessarily this, but the FMCG space in general with yet another industry veteran. Lalit Malik of Dabur would be joining us at about 9:30. So you may want to stay tuned for that chat as well. Myrish, just a quick view on Mahindra & Mahindra. Yesterday the stock corrected about 3.5 for a well-performing stock and the sales looking okay. It came off quite a bit. What's happening here?
No, so two elements here again, Neeraj. I think if you're probably looking at their farm equipment segment, if you're looking at the farm equipment segment, you're probably expected to see some moderation happening. I think the Escorts management also put forth that the kind of volume growth that you're probably witnessing in this segment over the past 2 years, they've been growing in excess of 20 to 24%. So I think the Kharif output was good. I think the Rabi initial sowing has been very, very encouraging. But in that sense, again, I think the kind of expectations of them expected to continue this volume growth over the next 2 years, I think that does get moderated a tad bit. Now, what happens in terms of the construction activity picking up, the railway activity picking up? Yes, I think elections and then what probably happens in the last quarter, I think there will be slower flows coming through both in terms of orders as well as what the government probably meets out. So that bit, I think the front loading of what will probably come through will happen in these first 3 quarters. But then a substantial pickup is expected once the elections are probably over. The second element obviously for Mahindra & Mahindra is how their core UV portfolio is panning out, and with 2 launches expected to come through, new revamps happening in terms of their existing models, and a couple of more platforms expected to come through. What probably happens is going to be very, very interesting, but the kind of launch expense, marketing expense, will probably have a say in terms of how the EBITDA margins will pan out from a short-term perspective. So yes, I think valuations probably look attractive at this point of it, expectations of UV picking up and reverting back to mean over the next few quarters. Farm equipment might moderate, but again, I think there will be a steady show there. Investment in subsidiaries probably are yielding reasonable amount of returns. So I think there is value from a long-term perspective, but again, I think investors are better off probably looking at the stock at lower levels and buying it in a staggered way.
Right, that's a call on Mahindra & Mahindra. We are now joined by our technical experts. We've got Hadrien Mendonca, a senior technical analyst at IIFL, joining us on the show, along with him Amit Harchekar, director at Indices Investment Advisors. He's also here with us. Gentlemen, good morning to you. Hadrien, I'll start off with you now on levels on the index and Bank Nifty, if there is a trade at all that one can take today.
Yeah, sure. Good morning, Devina. So, definitely Nifty is seeing, signs of a little bit of fatigue after that strong rally that we've seen in the previous week. Consolidation is what we are expecting, and I think Bravehearts could even use this opportunity to, actually go ahead and short sell. If you see the Nifty, it has formed, a hanging man kind of, a candlestick pattern on the daily charts. It's signaling some kind of uncertainties in the air. Definitely, we have huge events lined up in the coming days. So I think remaining cautious ahead of these events, would be advisable. In fact, if you see the Bank Nifty, even the Bank Nifty has formed a hanging man kind of a pattern, and Bravehearts for Bank Nifty could actually go ahead and short sell, keeping the 27,100 levels as a stop loss on the upside, and playing for the target of 26,600 on the downside.
All right, that's Bank Nifty. Amit, what about your call on the indices?
Well, my sense is on the medium-term perspective, Nifty has negated the falling gap of around 4th of October, and we think that has clearly given a trend reversal on the medium-term basis. Now, the strategy would be any decline of maybe 58 to 100 points should be used as a buying opportunity. For the new series, we have seen the long positions getting rolled over at an average price of around 750. So we are expecting a very strong support to come for futures between 820 to 830 zone. Apart from that, if you see the global dollar index, now that has failed to surpass the levels of 98.5, and now it's close to breakdown levels. Now breakdown levels is merely 0.5% away. So the moment we see the dollar index breaking that 96.4, we can expect a slide of at least 4 to 5%. So when globally dollar would turn weak, we can expect a strong rally from metals. Even in yesterday's trade, we had seen good outperformance from metals. So the overall bias for the market remains quite positive, because we don't think so now dollar index has a scope to move further higher. Even crude has jumped up, but overall we expect even Brent crude to slide towards $54 to $55. So that should also act positively for Indian markets.
Let's talk about some individual stock calls. I'll stick to you, Amit. Your call on SBI, you're buying the SBI futures and you're selling Bharat Forge.
Well, the logic for buying SBI future is if we go through an index called Nifty 100 15 liquid index, that has seen a retracement of around 78%. That the index has a correlation with Nifty of around 85%. And we think now this index is on verge of bottoming out, and from here we are expecting a strong rally. In that index, the second or third heavyweight turns out to be the SBI, and even if you see the SBI pattern, it has formed a bullish flag. Now this flag clearly indicates a good accumulation has happened from the 5th of November, and there is a likelihood that this rally could extend all the way to 304. So from a short-term perspective, 280 would be the stop loss for your longs, and you can expect a target of 304. The rationale behind Bharat Forge is we are not that negative, but right now there is a possibility that stock could test levels of 545, 550 before we see a major reversal. So from a short-term perspective, major short build-up has happened at the price of 580 to 585. So unless that is not taken out, we expect negative bias to prevail. So 585 will act as a stop loss for your short trade, and you should sell this stock for a target of 550.
Okay. That's Amit's calls. Let's take a look at Hadrien's calls as well. So you've got a sell call Hadrien on a Z Entertainment and a buy call on Adani Ports.
Yeah, and both these calls are associated with a very important 200-day moving average. It is a classic case wherein Z Entertainment has failed to surpass its 200-day moving average, whereas Adani Ports for the 6th consecutive trading session has held above the long-term moving average, and also finally has broken out with good volumes. Keeping this in mind, one can consider selling Z Entertainment December futures for a target of 465 on the downside, keeping a stop loss at 486, whereas one can consider going long on an Adani Ports for a target of 385 and keeping a stop loss at 368.5.
Okay. Gentlemen, just stay on with us. Lots more to talk about, but for the time being, let's go on to our special segment, which is Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock or a trend that he's picked up. Yash, what's on your radar today?
Morning, Devina. So we are tracking Just Dial on the charts today, and a sell call coming with the help of the MACD indicator. Let's first try and understand what it is. Basically, the MACD is a trend following momentum indicator and shows the relationship between two moving averages of price. How do you interpret it? You go long or you buy when the MACD line rises above the signal line, and you go short the other way around when the MACD line falls below the signal line. Now, in this case for Just Dial, let's get the price chart up. It has been trading in a narrow range after the big up move that we saw over here from 450 to 500. It has been mostly trading around these levels, and the MACD line, if we could enlarge the second panel over here, I could show you that the blue line over here, which is the MACD line, that has crossed below the white line to create a negative crossover, indicating that the bulls might be taking a breather from these levels, and we could see lower levels from the levels of about 489 to slip further.
Okay, and how well has this worked?
So on an average, if you went short when the indicator turned negative over the last 10 trading sessions, it would have given you positive returns of excess of 5.5%.
Okay, we'll watch out for this one as well. Just Dial. When it moves, it moves quite strongly. Let's wait and watch if it does this time around or no. Quick thought out here, Hadrien. Just Dial.
Yeah, absolutely. As he rightly mentioned that it is stuck in a pretty narrow trading band, and I would actually go aggressive shorts only if I would see the levels of 483, 482 being broken pretty convincingly on the downside. Till then, the range is would continue to maintain. I think it's better off to not touch it till then. Below 483, one can definitely go short with a stop loss at 490, and on the downside, as you just mentioned, when it moves, very fast, and I think on the downside we could see levels of almost 460. Why 460? Because there is a huge gap that has been created around those levels, and precisely it was created on the 30th of October. So it may make an attempt to come and close that gap of 460 on the downside.
Okay, got that. That's on Just Dial. Let's talk a little bit more about Yes Bank now. I mean, the stock in the last 2 trading sessions has gained closer to 9%. Yes Bank yesterday too was up about 4.8%, takes it to about 178 from the lows of 146 that it saw just a few days ago. What would the call on this one be, Mayuresh?
No, so Devina, I think a large element in what has got played out on Yes Bank and all the news surrounding it did have an effect onto the stock. But I think the market is now keenly watching out for what kind of disclosures actually come through. I think the management has clarified enough in terms of their exposures, both in terms of the holding company of Mr. Rana Kapoor, as well as the expectation that is largely coming out from GNPAs and NPAs. But 2 key factors here. One, I think the leadership change is keenly awaited by the street at this point of time. And the second element obviously is the divergence report in terms of what actually comes through from the RBI. So I think once these 2 aspects come to the fore and there is further clarity, I think there might be further expectations in terms of how the earnings might pan out. Considering all these factors. The third element obviously is their CET1 ratio, which is probably low at this point of time. So as the new person comes on board, I think the first thing that will be required to be done is capital raising. And at these rates, and assuming certain aspects, if they don't go sour, specifically in relation to asset quality and so on and so forth, I think what kind of an impact does it have on the book value is going to be essentially very, very critical from the bank's perspective. So I think the general consensus was 150 rupees kind of a book value for FY20. So again, from a valuation perspective, it's not expensive compared to a lot of other banks at this point of time. But I think it's better to wait and watch for all these clarity to probably emerge over the next few weeks. As it emerges and there is further certainty in terms of how earnings will pan out, I think it will then make sense to go all out and then look at the stock.
Okay, what else? Something that moved around in trade yesterday was PFC REC, about 12% higher for PFC. REC, and remember the management spoke to us yesterday, up about 5.5% too. So yesterday's session was a bit of a breather for these names. Amit, for somebody who is long and yesterday saw some bit of respite in trade, can there be more in store or should one get out of the position?
Well, I think the stock has formed a temporary bottom for one reason. If we see Nifty Public Sector Enterprise Index, that has almost tested the October lows. And from here on, that index is expected to rally at least 15% from 2 months perspective. So based on that risk reward ratio, we also think that REC PFC could bottom out at these levels. Within that, PFC looks quite strong compared to REC. PFC, there is a very high possibility that this rally could extend towards 110. So from a purely trading perspective, you need to keep a stop of 89 and stay long on this counter.
Okay, PFC REC doing rather well in the session yesterday. Constant queries about what to do with some of the auto component companies. Mayuresh, 2 stocks. One which has been falling quite a bit and yesterday bounced back, which is Motherson Sumi, versus that a Jamna Auto, which has actually had a lot of gains in the recent few months. But with the Ashok Leyland numbers looking the way they are, that stock got pummeled in trade yesterday, 1 month down about 8%. Any thoughts on either of these 2 names?
So again, there is a large element in terms of how earnings panned out, specifically in the case of Motherson Sumi, obviously had an impact on the price. But again, the management is very, very clear. And again, I think the expectations that the management has in terms of these businesses bouncing back over the next few quarters, the margins bouncing back, I think that is going to be a very key element and a critical element in terms of the overall performance. The second element in terms of their internal set targets over the next couple of years, both in terms of top line growth happening organically or inorganically, because they will have to probably take the acquisition route to probably achieve these targets, and even the ROCE targets that they probably come out with. I think a lot is going to depend in terms of how sharply their international subsidiaries are probably going to bounce back and the operating performance thereof. Now, all the news items that have probably surrounded that in terms of what probably happens with the entire Volkswagen saga, so on and so forth, I think the entire element in terms of how the price is at this point of time and how valuations are stacked up, I think it does become an attractive proposition. Can there be near-term hiccups from the next 2-3 quarter perspective? Absolutely. But again, I think is the long-term story intact in terms of what the management is expected to do and how earnings are expected to pan out? I absolutely believe so. So I think anybody who's holding on to Mothers and Sumi should hold on.
All right. Gentlemen, just stay on with us. About less than a minute left to go for market pre-open. And Neeraj, one more important aspect to watch out for is, the currency, and it actually depreciated by 1 rupee in a single day yesterday. So where the previous close was 69.5 or so, the close yesterday was 70.46. So a full or more than 1% depreciation in a single trading session for the currency. So we'll wait and watch as to how this opens up for trade this morning. But aside from that, the indications are on the negative side from Asia as well, and for the SGX Nifty. So you had Shanghai, which was trading in the green by 0.25% just a few half an hour to 40 minutes ago, and that too has slipped into the red now. For the Indian markets, the SGX Nifty now, the cues coming in are on the negative side by just 0.2%, and that's the pre-open on your screen. So we'll wait for these prices to stabilize. Won't go by this right now, but 10,847 on the Nifty, 36,250 on the Sensex. Individual stocks then, just to quickly highlight them for you, as Sun Pharma sees a recovery, some clarifications. In fact, most of the points clarified by Mr. Dilip Shanghvi, and the stock has seen an uptick of about 5% right now. Yes Bank carries on its upward trajectory, not with the 5% move, but just about 1% and a half, 181 on Yes Bank. Tata Motors at 177 now. Axis Bank, Bharti Airtel, Tata Steel are some of the gainers. JSW Steel is up 1%. IOC has moved up as well. Hero MotoCorp has moved up 0.5%. HDFC Limited is up 1%. ITC has moved up as well, about 0.25%. Should see HUL. Yesterday's move in a record all-time high for HUL. The stock is open flat right now, so 1826 on the counter. Amongst the losers, and Eicher Motors is down 1.5%, Hindalco is down 1%. ICICI Bank, IndusInd Bank, UPL, BPCL down 0.25% now. And Power Grid, Bajaj Auto looking slightly weak this morning. For the currency, flattish, not too much of a move.
Well, I think you call it, Devina. Sun Pharma is the one that is probably the big mover today post this clarification. I think just the stance that Dilip Shanghvi took, wherein he chose to come on the call and try and allay fears, is probably the reason why the stock is doing what it is doing. Well, let's look at some other names. Edelweiss looks like it'll start off another 5% higher. I think any kind of positive news flow towards liquidity should aid companies. I don't know if this is how it'll start, but yesterday was up 5% when the others weren't doing all that well. Today's session up 5% too. Let's wait and watch if it lasts. There is strength in Kesoram, yet again another 3.5-4%. Yesterday, I think the technical views were that at 96, 97 you could face a bit of resistance. Let's wait and watch. It's currently all over the place. Let's just wait for Kesoram to still stabilize a bit. Balram Puccini looks like starting off on a good note. Bajaj Hindustan looks like starting off on a good note. I think those the SAP prices being held, and it's a marginal positive. Maybe that could be aiding. It didn't aid the stocks too much in trade yesterday. Let's see if it aids today. Uflex, bring that one up. It's very difficult to really quite figure out what would Uflex do. Stock caught in IIFL storm for multiple reasons. The news optically seems positive. Let's wait and watch if that has some reactions or no. Radico Khaitan slips a little bit down about 1.5% in trade. And Adani Transmission is the other one that I just want to pull up. They've bagged an order for a transmission asset network set up in the state of Uttar Pradesh. No big reactions. Frankly, the market is devoid of some really big reactions, save for some large caps which are actually doing rather well for themselves. So that's essentially the pocket that you probably need to watch out for trades in the large cap space. The mid caps are a bit quiet in trade. Tata Motors up about a couple of percentage points, so that one too seems to be doing rather okay for itself. Mayuresh, before we let you go, I asked you about M&M, but if you had to choose one large cap four-wheeler auto name, which one would you buy?
No, so I think the obvious choice is going to be Maruti in this case, Neeraj. Again, I think the numbers have not been encouraging for the universe as a whole, and the softness in numbers will very well continue. December again is expected to be very, very soft for the industry as a whole, and it's going to take some time before the numbers start meaningfully picking up. And again, the kind of discounts that we've probably seen, I think they should start coming off as well. So as input cost pressures start coming off, again, the margins which were under some sort of pressure, I think they should start reverting back to means. And it's that entire volume-related leverage story. So I think as volumes come back to normalized levels, as margins come back to their average levels, I think the natural operating leverage on the balance sheet should play out very, very meaningfully. The second element is also the kind of utilization level at its Gujarat plant. So the earnings outlook over the next 4 to 8 quarters still remains strong. The market leadership positions across variants still remains very, very solid for Maruti. And in that sense, again, I think the earnings outlook should remain very, very reasonable. So if I have to pick and choose from the four-wheeler space, I think Maruti is something that we continue to like.
All right. We leave it at that, Mayuresh. Thank you so very much for joining us. Appreciate you taking out the time.
Thanks.
Rajesh Kothari, Managing Director at AlfAccurate Advisors, also joins us right now on the show. Thanks very much, Rajesh, for taking out the time and speaking with us. I want to come to you with some of these private sector banks and the performance in the last series, last 1 month. Particularly the larger ones, has been quite encouraging. You've seen the likes of an Axis Bank, the HDFC twins doing okay for themselves. Would you likely have them in your portfolio right now?
Oh yes, we are holding the private sector banks in our portfolio. If you recollect, till last probably about 7 to 8 years, we will be holding only the consumer-facing private sector banks. But in last about 3 to 4 months, we also added the corporate-facing private sector banks. So yes, we are holding private sector banks in our portfolio. We believe that on the corporate bank front side, the asset quality issues probably are behind us, and slippage going forward hopefully will remain under control. And also, as the NBFCs are facing some issues, I think market share of private sector corporate banks will also improve. The pricing power will come back in hands of lenders because the competition will remain under control. So there are number of I would say areas which will lead to improvement in the underlying ROA and therefore ultimately ROE. So we are pretty positive on private sector banking and finance.
All right, that's a quick take on the private sector banks. The other bank that I want to talk about is a Bandhan Bank. Now, in September, post that steep fall, when the RBI stepped in and disallowed Bandhan Bank from opening new branches unless they brought down their promoter stake holding, the stock fell from levels of about 750 or to about 500 now. I mean, the last 4 quarters, price to book 6.25 times, 520 price to book expectations 4.23 times. So the stock has also come off quite sharply. Nonetheless, the business looks relatively strong. Rajesh, do you track a Bandhan Bank, and would you feel that the kind of a price correction that we've seen is probably an opportunity on the stock?
So, well, we are not holding any of these newly listed banks, whether it is a small finance bank or whether it is a microfinance converted bank. We are right now holding all leaders in their sectors, the probably top 3, top 4 names as far as the banking sector goes. We believe that the advantage will remain with the top tier players rather than the emerging players. Yes, growth opportunities for everyone, but in terms of sustainability of that growth number and in terms of scalability of that growth number, I think they are going to face a lot of competition. One from NBFCs, second from within their own peer group, small finance bank, and thirdly from the large players. So whether it is a technology, whether it is a CASA, whether it is a cross-selling opportunities, I think the leaders within the sector are probably well placed compared to challengers. So we continue to remain bullish on leaders within the sectors, and therefore we are not holding the name of bank which you just mentioned.
Rajesh, good morning. Just a quick thought. Are you indeed putting fresh money to work right now, or at these stretch levels, if you believe these levels are stretched, you're holding back to some gunpowder?
Good question, Neeraj. See, basically what is happening is the macros are turning in our favor, whether it is a crude oil, whether it is a currency, whether it is, the US-China trade war related noise, whether it is a Fed rate kind of a, doing less rate hike next year. Very important parameter which is, to be improved upon is the overall liquidity, particularly NBFC liquidity in the country, because for example, look at the automobile growth. Is it because of lack of demand, or is it because of freeze from lending side? One doesn't know the clear picture. So I think it's very important that the liquidity comes back to the normal level for the earnings growth to improve in the fourth quarter. And please remember that fourth quarter is seasonally one of the best quarter for the country. So you need to make sure that normalcy returns, to previous, I would say, pre-September levels, from the money supply perspective. So what we are doing is that we are doing, very selective kind of a approach. We are positive from top-down perspective, and we are doing bottom picking kind of ideas. There are many companies which are 200 to, I would say, 400 crore profit size in the space, which are trading at a quite reasonable valuations with a underlying 15 to 20% return on net worth. So I think that is going to be a very sweet spot in India. To give you a perspective, there are only 550 companies which makes 100 crores plus reported net profit.
Right.
So when I talk about 200 to 300 crores kind of a profit making size, it is going to be very interesting, basket.
Okay, and we'll talk about some of those as well in a few minutes from now. Try and figure out where is it that there are green shoots for investing. But minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. Oil begins to move again on the upside as Saudi Arabia and Russia extend their cooperation pact. Suggestions for supply cuts may be tabled at the OPEC meet in Vienna on Thursday. Crude has gained nearly 4.5% overnight, the most in over 5 months.
Sun Pharma promoter Dilip Shanghvi has denied allegations of insider trading and poor corporate governance. He claims that the company has not received any communication from SEBI on reopening the insider trading case.
GAIL says it will go to a higher forum to challenge the Central Excise Tribunal's order of differential duty of 2,822 crore rupees.
NCC has received 2 new orders worth 220 crore rupees in November from state government agencies.
Iron ore will cost less as the state-controlled miner NMDC has cut lump ore prices to 3,550 rupees per ton and fine ore prices to 3,110 rupees per ton. The price revision is effective December 1st.
Lastly, some key brokerage calls for you. MK Global has initiated coverage on Gulf oil. The brokerage recommends buying with a price target of 1,150 rupees per share. This means a potential upside of nearly 50%.
Well, let's wait and watch if this indeed does that much or no. By the way, stocks on the move include a Balrampur Chini, include a Kesoram Industries and Ramkrishna Forgings. We were talking about this stock yesterday, about the bulk deals that had happened. Smart money entered into this as well, even though Amansa got out, and RK Forgings is up 5.5% in trade today. Amit, you want to comment on Ramkrishna Forgings on the charts?
Well, I don't track that counter closely.
Hadrien, any thoughts here? RK Forgings?
Me too, don't track it pretty closely, but the lower end of the range is around 520, 525 levels. And the major bull deal that we saw, that you just spoke about, was also around those levels. So I think as long as the 520 level is held on to, any kind of up move towards the 580, 585 mark cannot be ruled out in the near term.
All right. The other one being a Tata Motors at 178 now. What would the call on the stock be? Hadrien?
Yeah, so Tata Motors definitely is still not out of the woods. Any kind of rise that we're seeing in Tata Motors has been used to short sell the stock. Now, the only good part here is that it has managed to hold its previous low of 164 on a closing basis. Now, as long as that is held on to, I think one can consider going long on a Tata Motors, keeping a stop loss of 164. I know right now it's a pretty deep stop, but the way the stock is moving, we need to have deep stop loss. And on the upside, we could expect a mean reversion towards the 195, 198 zone in the near term.
We've got about a minute left to go for market opening. So just quickly run through the top calls of both our technical experts. Start off with you, Amit. What's the top call for the day?
Well, I think Cummins would be a buy with a stop of 780. Since there is a reversal in MNC index, it has moved about 200 DMA. We are expecting even Cummins to move towards the 840, 850 zone.
Okay, so Cummins India, that's Amit's call. What about you, Hadrien? What's your top call for the day?
Yeah, I'll go with the sell LIC Housing Finance. Given the huge bearish candle that we have observed on a daily chart yesterday, one can short sell LIC Housing Finance for a target of 435 on the downside, keeping a stop loss at 454.
Thought on the Nifty Bank, Hadrien, would you trade it?
Yeah, absolutely. It would be a little bold right now to go ahead and short, but then if you don't short it, in today's trade, and if the fall comes, you're going to miss out on the whole 300-point downside that I'm expecting. So definitely keeping a 27,100 stop loss, one can consider going short.
Okay, a bold shot from Hadrien on Nifty Bank. Watch out for that. Stay on, gentlemen. We'll take in opening thoughts from you as well. But here's how the markets are starting off. Well, flat as flat can be for all the three major indices. I doubt that the mid caps and the small caps would be doing anything different, but it's essentially a very flat start for the mid caps and the small caps to extremely flat start in the session today. Hardly any movement there. The Nifty Bank about 45 points lower, but nothing too dramatic. Let's pull up the heat map up. Straight away get to stocks because the index is lying absolutely flat. Keep this at the back of your mind. The index is absolutely flat. What about specific stocks? Let's start with the gainers. Tata Motors has about 1.5% kind of a gain. Yes Bank continues from where it left off yesterday, so was in the green marginally in trade yesterday, another % higher. The last 2 or 3 sessions, Yes Bank has had a good move. Sun Pharma 1.5%, so slam dunk yesterday. In today's session, a little bit of a bounce, nothing too dramatic, is now the top gainer on the index. Keep that at the back of your mind. Dr. Reddy is about 1% higher. Yes, I already spoke about Yes Bank, and HUL after that 4% up move, another % higher. So strong move for an HUL in the session today. What's not doing well? Mahindra & Mahindra down about 1.5%. NTPC down about 1%. BPHP IOC well, marginally off. Crude rising. Yesterday was a slightly dull day for BPHP IOC, and in today's session as well, they're doing just about okay. But even Stevens, I would say almost even Stevens for the gainers and the losses. I mean, a clutch of stocks in the green are barely above or not even more than 0.2% higher. So it's almost even Stevens for the market breadth. It's a very flat day for the large caps, at least not even seeing too many movers, save for maybe in ONGC and Sun Pharma. I don't know, Devina, if you have better luck at the broader end of the spectrum.
Well, we start off with the gainers. So Infibeam stacks up right at the top amongst the mid-cap stocks, 7% higher. Bajaj Hindustan is up 3.5%. Balrampur Chini. So sugar looks active today. Fertilizer as a pocket looking strong. So Deepak Fertilizers is doing well. Chambal Fertilizers also up about 2%. NIIT, yesterday's big mover, is up about 1% in trade today as well. Capital First is up 1%. You've got a Zensar Tech, which is looking okay right now. BEML, Shrey Infra, the likes of AstraZeneca, Syngene, 1% higher for all of these names. Raymond is also doing okay. Amongst the losers, an IL&FS Transport is down 3.5%. GE Power is down 1%. OMDC with Vijaya Bank, the likes of JP Associates, PTC, PFC, REC, should see what those two stocks are doing after yesterday's big bang move. Down about 1.5% for PFC. REC also looks weak by about 0.5%. Some stocks in news, so UFlex should pull that stock up to see how that one's performing in trade. NCC on the back of that order win, 3.5% higher on UFlex. NCC is up about 1.25% right now.
Okay, opening thoughts, anything that stands out? Amit, Harchekar, anything that stands out for you?
Well, I think Tata Motors is the one stock which can give a rebound towards 185. So that can be bought with a stop loss of 172.
Okay. Hadrien, anything that stands out for you on open?
Yeah, definitely. India's housing finance, is seeing an extension of the rally, and I think one should, ride the momentum on the upside. We could see the stock moving beyond the 800, 810 levels in the near term.
Okay. Rajesh, what's the view on autos? They've kind of been languishing for the better part of 2018, and now the troubles seem to be getting worse with the inventory build-up and the slightly lackluster month of November that we've seen already. What should an average investor do with some of the auto names?
Well, when you say auto, it is a very vast sector. So if you ask me, we are positive on passenger car industry versus commercial vehicle industry and two-wheeler industry. So we believe that right now it is a more of NBFC led problem rather than demand destruction. Please remember the penetration of car industry still remains very low in the country, and as we move from $2.5 trillion to $5 trillion economy, the car industry is going to grow, and it is going to be robust growth. There is no doubt about it. So I think that this is a temporary time frame, and as I mentioned, if you have a 2 to 3 year long-term view, then we continue to hold this industry. Also, there are auto ancillary sector, which is also at a very interesting sweet spot. The valuations have corrected. The earnings growth probably for 1 or 2 quarters is going to be under pressure because of the largest player in the industry is going through probably single-digit growth. But if you look at FY20 and FY21, the growth is going to bounce back very strongly. So we are fairly positive on passenger car industry. On commercial vehicle industry, it is going to be the industry always has a cycle. And you would have a lot of new regulatory norms which are coming through, and again after 1.5 years there are new norms which are coming through. So not too sure how the CV industry is going to pan it out over next 2 to 3 years. So we are therefore not holding anything in CV industry. That's our view on auto.
All right, there were some flashes earlier on your screen about Yes Bank's AMC launching 2 new funds, 2 new mutual funds there. Remember, in the month of July, the wholly owned subsidiary of Yes Bank, that is Yes Bank Asset Management, had received the SEBI go-ahead to go ahead and launch mutual funds in the debt and the equity space, and they said that they will be launching funds in 6 to 12 months. So I guess this is a follow-up to that. Yes Bank AMC there to launch 2 funds. But aside from that, just looking at a few other stocks this morning and what's been doing okay while we're talking about some of the other names. Yes Bank still is your top index performer, up about 2.1%. ONGC moves up too. Tata Motors is up. Dr. Reddy's, Ultratech and UPL are among your top few gainers. Within the pharma space now, Rajesh, what would you do, and what would be your pecking order?
Sorry, I didn't get the question. Can you repeat the question, please?
Within the pharma space, what would you be doing in terms of the kind of pecking order you have, and what kind of stocks will you be looking at investing in?
So pharmaceutical sector, we are getting incrementally positive on this space. We believe that the pricing pressure in US is going to get a little bit lower compared to what we have experienced in last 2 to 3 years. Also, the domestic pharmaceutical industry, we expect that growth to resume and going to be good growth. And there are few players which are going to report double-digit growth on domestic pharma side. On the investment side, particularly US FDA related cost, the compliance cost, I think there are many what I would say lumpy costs which has been already incurred in last 2 to 3 years. So going forward, you are going to get benefit out of your investment in your plant or in your where there are a lot of one-off cost on the legal and consultant cost and so on and so forth. So we are overall positive on healthcare space, but you need to be very, very selective because you cannot it is not like general kind of thing. It's just like information technology and pharma. Both you need to be bottom up. So we are holding a few companies in pharmaceutical space. We believe that sector can offer good opportunity over next 3 to 4 years. And also as the opening of the US market, because more and more approvals are coming, the approval process has become faster than what we have seen in last 3 to 4 years. So I think combination of all this makes us positive on pharma space.
Okay, Rajesh, just a question on a follow-up question on that. A lot of people are now starting to prefer the API-led companies, the Divis, the Granules of the world, because API prices have moved up quite stratospherically in the last 6 to 9 odd months. China is opening up as a market too. So there are 2 or 3 names out there which most people speak about, the Divis, the Granules, and a couple of others. Are you bullish on this segment within the pharma space, the API space?
So what is important, Neeraj, is whether you are into CRAMS side of it, or whether you are into generic side of it, or whether you are into combination business model. So say for example, there are some traditional drugs. Say for example, gabapentin. The gabapentin prices are moving up because it is a very, very traditional product, and therefore a lot of supplies are out from the industry. In last 4, 5, 6 years, because it becomes like most of them become probably unviable. So now there are only few players left, and it is a very traditional drug. The prices of that drug has shoot up because the demand is consistent and supplies all of a sudden has reduced significantly thanks to China and many other such issues. So you need to have a combination basket. You don't need to play only API. Now what is important is that how the company is investing into its own R&D to make sure that they also have their own product portfolio. Because if you have only API related thing, then there might be some limitations going forward when it comes to business scale. So we prefer companies where you have a both API plus their own product portfolio, and there are good companies available in this space which can offer such business model.
Okay. Rajesh, really appreciate your time. Thank you so much for taking the time out and being with us. At some point of time, we'll talk about those companies which are in the top profit generating part of the markets and try and figure out what should people do or investors do. But maybe we'll save that for another occasion. But thanks for joining in today and giving us your thoughts. That's the view from Rajesh Kothari of AlfAccurate. As we speak, the market's down about 1/3%. At least the Nifty bank is. The Nifty and the Sensex very, very flat as well. A pocket that is kind of bucking the trend today is sugar. Balrampur Chini is up about 5%. Renuka, Bajaj Hindustan too. But some of the others as well have done reasonably okay for themselves. Amit, Harchekar, a trader-friendly pocket. Today moving up a little bit in trade. Do you track any of these stocks on the charts? Any thoughts on any one of them?
Well, my sense is Balrampur Chini has taken a very strong support at around 95, and now there is a possibility that this rally could at least extend towards 116. So we are expecting a retracement of this down move towards 116, but at around 116 the view would turn neutral. So we have a positive bias only from a short-term perspective, but you need to keep a stop loss of 94 on a closing basis.
Okay. Amit, amongst the large cap names, for somebody who initiated a long on a Yes Bank, say 3 days ago, is sitting well and truly in the money, would you recommend taking some profits off the table, or do the charts look strong enough for more?
See, I would evaluate this from a 2 perspective. On Yes Bank purely chart, it has formed an ending diagonal. There is a possibility of a rally towards 215. On other perspective, if you see the Nifty 100 liquid 15 index, where we are expecting a lot of buying taking place, that index is expected to rally by 15%. So even if you apply 15% rally on the Yes Bank, that would provide you a target of at least 208 to 210. So from a conservative basis, we are expecting this rally to extend towards 210. We don't expect this stock to break or move below 154 in the coming weeks.
A stock that's languishing the last couple of days, Amit Harchekar, is Mahindra & Mahindra. Down about 3% yesterday, down another couple of percentage points today. What do the charts indicate?
Well, I think the structure looks weak. 755 are a very strong support zone. So we are not expecting a major decline in this counter, but this counter could turn sideways from 735 on the lower side, and on the upside 800 could be the cap. So we have a neutral view. The stock which would rally in the coming weeks could be Hero MotoCorp or Maruti, where we have seen a good amount of long accumulation.
We'll leave it at that, Amit. Thank you so much for taking the time out and being with us today. Really appreciate it. That's the view from Amit Harchekar on specific pockets. M&M as a space or as a stock looks weak. The structure looks certainly weak out there. Okay, before we take that break, an important story. The government appointed IL&FS board has put out a second report on the progress made by them to try and revive IL&FS. It lists out some internal measures like trimming manpower costs and others like putting some more assets on sale. Sajid Mangat's here with the details. Now, Sajid, I believe, a long list that they've drawn up.
Yeah, this is the second report which has been brought out by the new IL&FS board, and it basically divides into two halves. One is the manpower rationalization, and the second one is the operational rationalization which is happening. IL&FS board is very critical, is saying basically that they're going to cut down the manpower by 65% and the wage bill by 50%. Now, to give you a perspective, the entire group had a wage bill of nearly 1,000 odd crores for FY18. So that what they're saying is that the cut down in manpower and wage bill will bring down the cost from say 1,000 odd crores to 500 odd crores. That's what they are saying. So that will bring in additional 500 crores of liquidity, which now is getting drained because of the wage bill which is there. The second thing is that it's going to be done through salary rationalization, employee, restructuring, which is going to happen. Amalgamation of roles of the employee, which will be there, and all this would mean that there would be a huge amount of retrenchment in IL&FS group going forward, or at least in the process, because what we've been told is that they have been working on this thing for last a month or so, and it's now going to be announced. So this is maybe an announcement by the company that you're going to hear a lot about the retrenchment happening in the IL&FS group going forward there. The second one is from the operational point of view. From that point of view, if you look at it, they have they have basically taken they've shut down a lot of regional offices of theirs. They're going to put office space in the IL&FS Financial Center also on lease. Now that would give them roughly around 20 odd crores on an annual cash flow basis, and they're all going to shut down or put the lease out for various other offices going across the country. They've also terminated some of the lease agreement for guest houses. Now this was one of the allegations that some of the employees had acquired assets and they have given their assets as guest houses to the company, and they were getting huge amount of money, especially in the senior level. Now, though they haven't given the details about this, they have said that they have terminated those agreements, which will lead to a substantial amount of savings for them going forward. The resolution plan is still under works, and Alvarez and Marshall, which has been appointed to help in the cash flow and resolution plan, is going to look at on a case by case which is going to happen. 342 was the number of companies which IL&FS mentioned. They said they've been able to only review 165. Of that, 100 have cash flow issues till March 2019. That means we are going to see a lot of more defaults happening now to March 2019. Sure. And every bond or every repayment will be defaulted till then. They are going. The road subsidies are going to get into have a default issue. The energy business has a default issue. Financial services, IL&FS itself has a default issue. So it's going to be a big challenge for them before they come out with a resolution plan for each entities. Remember, they have put two entities on the block. What is the securities and the renewable energy on the block. Decisions are expected in the next 30 to 60 days. But as and when that happens, that's additional cash flows for them.
Right. All right. Sajid, thanks a lot for that. So that's a comprehensive take on the second report that comes out from the IL&FS board that was constituted to look at all of these IL&FS related companies. Well, that's about it on this leg of Indian Open. We have lots more to talk about on the other side of the break. We assess the impact of lackluster festive season on Dabur's plans for the rest of the year with CFO Lalit Malik, and talk about the tailwinds the paper sector is witnessing with the management of JK Paper.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're still watching Indian Open. Rural consumption has seen a marginal slowdown compared to the buoyancy seen in the first quarter, according to Nielsen data. It's bad news for players like Dabur, which plans to strengthen its rural distribution network by rolling out various initiatives. So does it throw Dabur's double-digit volume growth target for the second half of FY19 in jeopardy? Let's ask Mr. Lalit Malik, the CFO of Dabur. Mr. Malik, thanks very much for joining in. Appreciate you taking out the time. I'll start off with that, which has been a slightly more disappointing festive season. And what does it do in terms of, your volume targets, your planned double-digit growth targets? Does that push it a little forward in terms of the timelines to meet it?
Well, I think as far as our volumes are concerned, what we still feel is that on an annualized basis, we will continue to have lower double-digit volume growth. There has been some seasonality which we have seen. There was a high growth in quarter one and quarter two was a little muted. But considering the overall scenario for the annualized basis, we do expect that our growth in India FMCG is likely to be in the lower double-digit on an annualized basis.
Considering now that, the economic data also that's coming out, and particularly the GDP number that came out at 7.1% below expectations, suggests that there's some a bit of a slack in consumption. Is that a big worry for you?
Well, I think if we were to look at in terms of the growth scenarios, what we do expect is that the sentiments have been to some extent muted. At the same time, what we do expect is the winter is going to be a little mild this year, so there will be some impact. But if we were to look at on an annualized basis, I think things will even out. So we do expect to be steady growth going forward as far as the top line is concerned. On the margin, there would certainly be some pressure at the back of inflation, which will have some impact on the margins. But considering the fact that we are working towards our synergies and cost reduction initiatives and select price increases, our efforts will be to maintain the margin as we go forward.
So can you quantify that for us, sir, in terms of what kind of, how much of a margin impact will you see, and what is the quantum of, cost measures control that you're going to be taking?
Well, I think it's very difficult to quantify the exact amount, but what we certainly can see is that there has been an inflationary impact of around 3.5% to 4% that we have seen on the input cost of our category of products. However, our price increase has been within the range of 1.5% to 2%. So therefore, the differential is something that our efforts have been to absorb through our synergies and cost initiatives.
All right, so closer to about 1.6 odd percent. So let's just talk about the split between the rural as well as the urban footprint for you. So while your footprint and reach in the rural segment is stronger, the business contribution still comes in majorly from the urban segment. Is there a plan to make sure that the contribution is you up the ante on the business contribution from the rural segment as well to match the urban segment?
Well, I think if we were to look at the split between rural and urban, it's around 47% of our revenue comes from rural and the balance is from the urban. And what we have seen is that the rural growth has been comparatively faster as compared to the urban growth, primarily on account of our expansion of the distribution network and having the regional focus and improving the portfolio through direct distribution. So therefore, we have seen rural growth to be at a better pace as compared to urban, but at the same time, the urban growth is happening at the back of very strong modern trade growth and cash and carry growth. At the same time, the e-commerce business is also showing a very healthy growth for us, though the base is small. So in a nutshell, there has been growth both on the urban as well as rural, but rural has been comparatively higher as compared to the urban.
What would the growth trajectory be for the rural segment and the urban segment?
Well, as far as the growth is concerned, as I said, that overall we do expect to be on an annualized basis at low double digit at volume on India FMCG side.
Okay, let's talk about what is going to be the next, big product or a segment that is going to drive Dabur's revenues. Are you focusing on specific categories for the next leg up on growth? And could you break that up for us?
Well, I think as far as our category growths are concerned, we do expect in view of the winter coming forward in next few months, good growth on the health care, health supplement sector comparatively, specifically on Chyawanprash, honey, and also considering the fact that we are picking up three strong brands and investing heavily on to their distribution and ad pro support. We do expect those brands to also give us a very healthy growth, and they are Lal Tail, Honey Tuss, and also Hajmola. So we and Pudinara to say. So we are focusing on those categories. At the same time, other categories like shampoo or hair oil, at the same time skincare and juices also we see a very healthy growth, as in case of juices we are already a market leader and we are consolidating our position. So each category there has been different initiative and focus, and overall we do expect that we are able to maintain our market share and grow wherever there is an opportunity.
Right. So in earlier communications, the India business CEO highlighted that three categories in particular is where the targeted growth is expected to be about 15 to 25% in the next 3 years to come. That's going to be the digestive area, the cold and cough category, and baby care as a segment. Is that going to be a meaningful contribution to the revenues of Dabur from these three segments?
Well, certainly, I think considering the fact that we are investing heavily there, the growths are likely to be accelerated, and therefore in terms of the contribution, they are high margin products, and we do expect to help in terms of strengthening our bottom line.
Mr. Malik, that was going to be my next question. You are aggressive in a lot of these categories, which might come at the cost of margins. You yourself have said that H2 might see a bit of a dip on an overall basis, about 150 bips, but you have contribution from the high margin segment starting to pick up as well. What does this do to the trajectory, not just over the next couple of quarters, but if it is possible to predict, the margin trajectory over the next 6 quarters?
Well, I think if we talk in terms of margins, there would certainly be pressure, as I said earlier, considering the fact that there are inflation, there are fuel-related costs, and there is also on account of the currency devaluation. So we do expect the pressure to continue on the margins. Our efforts is going to be to absorb the margin through our cost initiatives and select price increase and maintaining the margin that we currently have. That's going to be our efforts. But it will all depend upon how the inflation will pan out, how the consumer sentiments and competitive prices are going to be in terms of our category of products. So we'll have to see those implications and then take our call. But certainly our efforts is going to be to ensure that we maintain our margin, but at the same time, a bigger focus is going to be to maintain our market share and increase our market share.
I know the reason why I asked you that because you were talking about specific categories, and I thought because the high margin categories would make a meaningful growth, then therefore it will help you mitigate some margin pressures. But fair enough, since you're talking about categories, just one question from my end on the international business. There you've seen some leg up. How does that look like shaping up over the next couple of quarters at least?
Sure. As far as the international business is concerned, on the local currency level, our growth has been very healthy and at a very steady pace, specifically when we talk countries like Turkey, Egypt, Nigeria, etc. But the exchange devaluation is pulling the consolidated amount down because there have been very steep devaluation that we saw in Turkey, for example, at 30%. So that pulls down the consolidated level of revenue that we talk about. But when we consider on the local currency level growth in the local market, there have been very healthy double-digit growth that we have seen in these markets, and we do expect this trend to continue. So other than the exchange and some geopolitical disturbances that we have seen in MENA region, otherwise the business seems to be at a very steady pace and on the growth path.
Right, sir. We've got an idea on pretty much all of the aspects. Just one more thing that before we wrap up that I'd like to ask you about is what is the plans for distribution, and how much more are you planning to strengthen it?
Sorry, I didn't get it. You're saying a plan regarding the distribution?
Yes.
Okay, as far as our distribution is concerned, we are focusing on the regional growth under the scheme of RISE, which is the regional initiatives and speed of implementation. We are focusing more on the activation at a regional level, understanding the differentiation between the states that we have within the country, and we are focusing on the direct distribution to the rural areas. At the same time, we are investing behind the brands in terms of the AdPro, and we are growing on the rural market. As far as the urban is concerned, on the distribution channel, our focus is on the e-commerce, where we have seen a very healthy growth, and we are using the digital media in terms of reaching out to our consumer and getting the feedback and providing new products. We are coming out with the new product launches, and also at the same time our modern trade and cash and carry is also giving us a very healthy trend. On the other hand, on the general trade, we have seen stability coming back since the impact of GST is behind us now. So our focus is on ensuring the reach expansion, ensuring the product portfolio enrichment, and exploring the new channels of distribution to reach out the customer. And keeping all these things together, we are strengthening our distribution network.
Got that. Mr. Lalit, thanks very much for joining in. Appreciate you taking out the time and having this discussion on Dabur's future growth plans with us.
Thank you very much.
That's the management at Dabur talking about future growth prospects. The stock, though, down closer to about 0.75%. But moving on, Indian paper makers have had a good run over the last 1 year. The world's largest paper market, China, has restricted the import of low-grade recycled paper, which in turn brought buyers to Indian paper makers. JK Paper has caught the tailwinds well, growing faster than peers. But can it sustain this growth? Agam Vakil had a chat with President and Director A.S. Mehta and began by asking just that.
Okay, as far as the industry, if you talk, the industry is likely to grow at around 7% this fiscal year, and there are number of factors which are the demand driver for the industry. The packaging board is growing at almost double digit. It is growing at something around 15-16%, and that's the the segment which is driving the growth. This is because of the FMCG sector. This is because of the organized retail, and also the more and more packaged goods sale increasing in the country is driving this growth. This is the one part. The copier paper and the maplitho paper, which is we call the copier and the maplitho category, that is growing at something around 6%, and it's a very healthy growth. In fact, in the Western world, this category is degrowing, but in India, we are growing in this category also something around 5 to 6%. The coated paper is also growing at something around 4 to 5%. And the industrial craft, which is again the other category of the packaging paper, that is also growing at something around 7 to 8%. So in all these segments are showing a healthy growth rate, and in fact India is the fastest growing paper market in the world and likely to be so in next 10 to 15 years. So this is on the outlook for the industry.
Right.
And if you talk about the JK paper, I'd say that this quarter we grew by 17% compared to previous year, and the previous year, in fact, this quarter was a lot of uncertainty post GST. So this 17% growth, I would say that it is not like to like period. On a steady state basis also, I would say that our growth is going to be better than the industry growth. We have been always outperforming the industry trend, and the same should be there for the current fiscal as well. When you talk about the next fiscal, I would say that post acquisition of Sirpur, we will be starting production sometime in March. So next fiscal year, the capacity of 1.4 lakh ton will be the additional capacity available to JK paper, and even if I utilize the capacity something around 70-75%, then also this is going to give us a volume of 1 lakh ton, which is more or less 20% of the existing volume.
All right. Mr. Mehta, then let's come in and talk a little more about growth. That you guys have outperformed the industry is a given, considering the 17% growth that we've seen in the quarter as against the 7% growth for the industry. That's true. So on a blended basis over the next 3 or 4 or 5 years, can you give me an idea of the CAGR that you can expect?
Yes.
Can we work around with something like a figure of 15%, 10%, 20%, considering the fact that you're also seeing an expansion and capacity, as you have mentioned? What can we expect as we move into the next, say, 5 years? Yes. The reason why I ask you this question is because we want to know whether or not this growth is sustainable going forward.
See, I would say that, as I said, that next year itself I will have additional capacity of 1 lakh ton minimum, and thereafter we are going to utilize the Sirpur capacity more than 1 lakh ton, because it is going to be something around 1,30,000 or so. So that is one factor, and in 2.5 years time, our packaging board capacity which we are setting up in Gujarat, that should be available, which is going to be 1.5 lakh ton minimum. So these two things should give us a substantial addition in capacity of something around 3 lakh ton, which is I would say almost 70% of our today's capacity. So if I add that volume, that itself gives something around over 15% CAGR in next 5 years. At the same time, I also have an outsourcing strategy, because some of the variety which we don't produce, we normally source from the overseas sources, and that volume is also growing year after year. So that should also give a volumetric growth. So I mean, our target is going to be more than 15% in next 5 years.
Okay, Mr. Mehta, currently, how is the revenue split panned out between copier paper, packaging board, as well as coated paper and whatever other categories that you have? And how do you see this product mix changing over the next 1 year, or do you expect this product mix to remain the same largely over the next 1 or 2 years?
See, if you ask me, for largely 1 to 2 years, the product mix will not undergo a major shift, because the Sirpur capacity, which is incremental capacity, will add more of a maplitho, some special variety, and hopefully copier as well, some quantity. So it's not going to undergo a major shift in next 1 to 2 years. But once our packaging board capacity becomes operational, then that additional will be only in the packaging board. So our packaging board volume, which is almost right now something around 20%, which will move up, and the capacity will be somewhere around 40%.
All right, sir. So let's come down to your inputs then. A word on lumber prices right now, and from what I understand, there is an advantage playing out for the industry. But I also understand that this is relatively cyclical. So based on the cycles, and if you can elaborate a little more how these cycles work out for the paper industry, and to what extent can we expect this particular tailwind with respect to lumber prices to carry on for you, JK Paper specifically?
See, you are right. There are two factors. One is the global pulp prices, and consequent upon the higher pulp prices, the higher paper prices. And when there are these kind of a trend, the domestic industry is benefited to some extent, and particularly JK Paper, we are benefited more, because we are integrated players. We produce our own pulp, and so we don't buy the pulp from the market where the pulp prices are much higher. There is a cyclicity in the pulp prices, but there are also the trends, and the long-term trends, and the mid-term trends, and the short-term trends. In fact, right now these higher pulp prices are because of some demand-supply mismatch of the pulp demand and supply scenario, and also the China factor. I mean, as we all know that in the commodity prices, the basic and the major impact come from the China. And if the Chinese buying starts major way, then the prices moves up and shoots up. And this is what has happened, because there was a restriction on the mixed waste import in China. And since the fiber, I mean, the demand is there, but when you don't, the retrieve fiber from the west, then you are going to use the virgin fiber, that means the pulp. So the pulp demand was higher from China, and that resulted in the higher pulp prices globally, and that impacted the global paper prices. But in last few months, this has softened up. In fact, the pulp prices have come down by almost, I would say, something around 7-8%, and in the short term it may come down further, maybe 2-3%. But in long run, maybe in the medium term, I would say the pulp prices will remain in the band of $700 to $750, which in fact crossed $800 2 months back. And accordingly, the paper prices have also come down by $40-50. But it is not going to impact in a major way to the Indian players, because our cost is not going to go up, and the paper prices are more or less at par with the global paper prices. Only impact I would anticipate is because of the rupee dollar parity. Since the rupee has become stronger, that itself impact is something around 4 to 5%. So in time to come, there may be some correction of the paper prices to that extent.
All right, and so that's a very good point, and something that I'd like you to elaborate over. Now, from what we understand is, among the challenges in the near term, one could be possibly the impact that China has on paper prices in general around the world, and secondly, of course, is the way that currency moves around. So can you just elaborate a little more on how JK Paper intends to tackle these challenges, if at all, or it's something that the entire industry has to deal with? Can you tell us a little more about these specific elements?
See, there are two factors. One is that the currency, And currency, I would say that if there is an impact of the currency fluctuation, currency volatility for a medium term, I mean, we will have to correct the prices. There is no other option left. As far as the global prices are concerned, or the China factor, I would say to a great extent the industry is not likely to be impacted because of the global prices, because Indian prices are more or less in line with the global price trend. So the prices have already come down to some extent, and we have corrected our prices more or less, and minor correction can happen. But the currency situation, I mean the price leading from the currency volatility, if the dollar remains at 70 rupee, then to my mind something around 2 to 3% price correction is needed.